Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 21st, 2024, and we're diving into the latest earnings report from Ross Stores. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Ross Stores has just released their third quarter earnings, and there's a lot to unpack, from their financial performance to strategic initiatives and future guidance.
Revenue and profitability overview. Let's start with the top line. Ross Stores reported a net revenue of $5.1 billion for the third quarter of 2024, which is an increase from $4.9 billion last year. John, can you shed some light on this?
Absolutely. The revenue growth, albeit modest, is driven by a 1% increase in comparable store sales. Despite the challenging retail environment, Ross managed to improve its operating margin to 11.9%, up from 11.2% last year, thanks to lower incentive, freight, and distribution costs.
And what about their net income?
Net income rose to $489 million from $447 million in the previous year. This increase is a testament to their effective cost management strategies, even though sales were below expectations.
EPS performance and analyst expectations. Now let's talk about earnings per share. Ross Stores reported an EPS of $1.48, which is above the forecasted $1.40. John, what does this tell us?
This is a positive surprise for investors. The EPS growth of 11.3% year over year indicates that Ross is managing its operations efficiently, even in a tough retail climate. Beating the forecasted EPS shows strong financial discipline and operational execution.
Strategic initiatives and share buyback. Ross Stores has been active with its share buyback program. Can you tell us more about their strategic initiatives?
Sure. Ross repurchased 1.8 million shares for $262 million in the third quarter, and they are on track to buy back $1 billion in shares for the fiscal year. This is part of their two-year, $2.1 billion repurchase program. However, they faced challenges with their merchandising initiatives, partly due to severe weather conditions like Hurricanes Helene and Milton and unseasonably warm temperatures.
How do these factors affect their strategy?
These factors have pressured their sales, but the company is focusing on delivering compelling value to drive future growth. The share buyback is a signal of confidence in their long-term strategy.
Future outlook and guidance. Looking ahead, what is Ross Stores' guidance for the fourth quarter and the full year?
For the fourth quarter, they project an EPS range of $1.57 to $1.64, with comparable store sales expected to grow by 2 to 3%. For the full year, EPS is expected to be between 6.10 and 6.17 cents. It's important to note that last year's results included a 20-cent EPS benefit from an extra week.
What does this guidance suggest about their future performance?
Despite some headwinds, Ross remains confident in its ability to deliver value and achieve profitable growth. Their focus on cost management and strategic initiatives should support their outlook.
Key takeaways. In summary, Ross Stores has delivered a solid performance in the third quarter, with revenue of $5.1 billion and an EPS of $1.48, beating analyst expectations. Their strategic initiatives and share buyback program highlight their commitment to shareholder value. John, any final thoughts?
Ross Stores is navigating a challenging retail environment with resilience. Their focus on cost management and strategic growth initiatives positions them well for the future. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Ross Stores' performance in the comments below.